Hey.
Hey, can you, yeah.
Yeah, all right, let's see.
So it's recording. Should we stop it?
I'm starting to stream now.
Okay, perfect.
All right, I think we're good.
Fantastic.
Awesome. Well, sorry for anyone who's joined to be running late. I'm Jackie Quintel. I'm Managing Director in Marsh's Financial Institutions Industry Practice, and I'm very excited to be here today at Parallel with Sarah Downey, talking about insurance for digital assets, blockchain, and others in the crypto space. Sarah, you want to introduce yourself quickly?
Sure. I'm Sarah Downey. I'm a Managing Director in Marsh's Financial and Professional Lines Division, and I co-lead our DART team, which is our Digital Asset Risk Transfer team.
Awesome. Thank you. I should say, too, I'm relatively new to Marsh and extremely excited to be working with Sarah and the DART team. I've done a lot of work in this space prior to my time at Marsh, specifically on the insurance side for digital assets. But what's really impressed me about Sarah and the team is how much they can do and the expansiveness of their resources. So I'm excited to talk with everyone today a little bit more about what insurance means and how it can support adoption in this space, and hopefully answer any questions from the group. Sarah, what does the DART team do?
Yeah, that's a great question. So we have two pillars as far as what we stand for and what our strategy is. The first is that we focus on working with our clients who work with blockchain technology, many of whom also work with digital assets, to help them obtain the necessary insurance coverages to operate their company. And then the second is that we spend a lot of time educating insurers about blockchain technology and industry-specific risks so that they're ready to offer insurance to our clients when they need it, especially because, as we all read a lot about and hear a lot about, insurance capacity in this space is still somewhat limited.
Awesome. I think the second part is so important, and really that cohesive strategy we have for engaging with insurers to expand the marketplace is such an important pillar and something that I think really meaningfully drives interest and capacity for the benefit of our clients. It's also interesting to me as I think about Marsh, the way that we engage with our own tech resources in Marsh Digital Labs, who are leveraging blockchain solutions in the insurance space. So we really have this broad cohesive view where it's the client piece, the insurer education piece, and then thinking about tech adoption for ourselves, which has really been awesome to see. I guess when I think about insurance for firms focused on blockchain and digital assets, there are a lot of drivers, but for me, it seems to be that insurance can really boil down to supporting growth and innovation. So maybe you can talk a little bit about the key types of insurance that DART clients contemplate.
Yeah, I would say there are probably three main types of insurance that our clients look for in this space, or at least what they prioritize. The first, probably two tied for first place, but there's crime insurance, which is also known as fidelity insurance, and that comes through the commercial crime market. There's also, if you're looking at cold storage only coverage, that comes through the specie market, which is a specific type of insurance market out of London. The other coverages are D&O, which is Directors and Officers Liability, is a coverage, definitely a prioritized coverage in the space. There's also E&O, or Professional Indemnity, Errors and Omissions coverage, as well as cyber. And then there are a couple of other lines of coverage too, which normally take a secondary, clients look at that after they get the other coverages in place, but those could range from employment practices liability coverage, kidnap and ransom, and other coverages along those lines.
Awesome, thank you. It's interesting, right? Because I think the crime piece of it is important from the perspective of attracting and building trust with customers and clients. And then on the D&O side, it's equally important, but slightly different from the perspective of attracting board members. So, I mean, maybe you can talk about that a little bit in terms of, how company indemnification works, and from the perspective of an individual board member, why D&O is so important as they're contemplating, whether to join or not?
Yeah, and so directors and officers liability insurance, or D&O insurance, is important to any company regardless of what industry they're in. Traditionally, the insurance came about to protect the individual directors and officers of a company. We call it personal asset protection. So if an individual is sued for something they did in their capacity as a director or officer, and for whatever reason, if the company is unable to indemnify them, meaning the company won't pay their defense costs or settlement or judgment, D&O insurance really came about in order to pay on behalf of those directors or officers. So it really is personal asset protection. And since then, D&O has expanded. It also covers the entity itself. So if the company is alleged to have done something wrong. And in the blockchain space, it's especially important because we see a lot of newer companies, and in an effort to attract seasoned or experienced directors and officers, those individuals know to ask about the D&O insurance that's in place. And so we really do see that D&O as a coverage that most companies in this space look to buy first for that exact reason, to attract top talent.
Great. And how about something like crime or E&O? What do you see as the drivers for coverages like that?
Yeah, it's totally different than D&O. So for crime, which covers the theft of assets, so if there's a hack, let's say at an exchange or custodian, the assets or the private keys are stolen, the value of the assets are gone, crime insurance should reimburse for that loss of assets. And so the driving factor in this space behind buying crime coverage is really marketing purposes. If you're an exchange or if you're a custodian, you want to be able to tell your customers that you have insurance in place so that if there is a hack, which, obviously most companies feel would never happen to them, but if there is a hack, there's insurance in place to help reimburse the customers for the loss of their assets. And then E&O is again, very different. The driving factors behind buying E&O, which is professional liability insurance. In large part, we see clients in the space buying it either because it's required by a contract that they might have with a customer or a vendor or a partner, or because the regulators require it. And we really do see E&O, professional indemnity insurance, come into play more because it's a regulatory requirement at this point.
That makes sense. I'm glad you mentioned that on the crime side, most companies certainly don't expect that they would ever need to use the insurance. And it's interesting, I think it seems to have normalized a bit, but in the early days of this space and before you and I were working together, what I heard often, or more often than I would have expected, is that there was this idea that if people had insurance, that was somehow a demonstration or admission of a weakness. And your point about marketing is such a great one, which is that you have all the security, and insurance is just a layer on top of that makes customers feel better, as opposed to something you buy because you're worried. And then to me, that lines up with the way that more traditional corporates buy insurance too, right? So people don't buy crime or E&O because they are worried that, they're probably going to do something wrong or someone's going to steal something. But they do it whether, as you alluded, for contractual requirements or regulatory requirements, or that marketing piece, which can really be so important. So thank you for pointing that out and highlighting it.
Well, and Jackie, I mean, you're totally right. Like traditional banks buy crime insurance and buy all of these coverages we're talking about. And, in large part, it's because they buy it for that catastrophic event to happen. And you think it will never happen to you, but in this day and age, there's a good chance it will happen at some point, and so you need to be prepared.
That makes sense. One of the things that I think can sometimes be challenging is identifying how each of these coverages address firm challenges, the things that you talked about, like building customer trust, attracting top talent, whether that's employees or board members, complying with regulatory requirements, and then ultimately protecting the company's balance sheet. And so you have all of those underlying factors, and then are faced with the challenge of designing a risk transfer program that is sufficiently broad, but also makes sense in the context of a firm's growth trajectory and fundraising, right? So it's easy for us to say, here are all the things that you could buy or should at some point. But how do you think about that? Like, how much do you buy? When do you buy each thing? How does it work? Particularly as companies are growing and still raising money so that it all makes sense.
Yeah, no, that's a really good question. And I mean, the answer, unfortunately, is that it's very client specific. We at Marsh, our team, and as Jackie knows, because she's really part of our team, we spend a lot of time working with our clients and understanding their business, understanding their goals, understanding where they are today, and trying to figure out what their budgets are and what their priorities are. So it's easy for us to talk about all these coverages that aren't necessary at some point. But once we get a better understanding of each client's specific needs, their budgets, their timing on certain, goals that they want to make, we work with them and we really tailor this. So if we have a very new startup, maybe they don't have money to spend a lot of money on D&O, but they want to be able to attract some experienced directors. And so we'll work with them. We'll try to work within their budget and find coverage that works for them. Same on the crime side. And then there's always different levels of coverage. So, if we come back to you with a quote on crime or specie coverage that maybe is above your budget, there's ways to narrow the coverage so that it fits within your budget. And quite frankly, you might not need that breadth of coverage anyway.
Awesome. Thank you. I think the customization really applies in a few areas. So there's that question of what do you buy, how much do you buy, how broad is it, and how do you structure it? And then things like deciding, which coverage to buy when or how much of each one to buy. And the good news about insurance is that the policies tend to be written for a 1-year term. And I know that we've had lots of clients who might go into it thinking that they'll have a certain amount of assets and need a certain amount of crime coverage based on that. And then it changes, and you can always add more to it or buy more after that first year, and you've already been in the insurance market and you're talking with partners and adding new capacity potentially from other players. So it's good to know that it's fluid, both in the beginning and then over the course of a few years.
Yeah, no, it's true. I mean, we've had clients who, to Jackie's point, most of these policies are for a full year, but we've had clients who the value of what they hold has changed so much that we've literally, in the middle of a policy period, so in the middle of a year, we've canceled that policy, and we call it cancel and rewrite, and then we've rewritten with the same markets, the same underwriters, a new policy for the level of assets of coverage that they actually need. So it is very fluid, and we spend a lot of time not just with our clients right before a renewal of their insurance or not right before they place insurance for the first time, but we really spend a lot of time with them as they grow and try to understand, where they are throughout the entire year so that if something changes, we're prepared to go to the insurance markets on their behalf.
Great, thank you. Well, I know we're going to be live again, I think next month and over the course of these other parallel events in the coming months. And certainly we can talk about some of those things like the underwriting process. What kind of information do clients need to provide? What type of questions do underwriters ask? How does Marsh help prepare them for that to make sure that the deal is structured appropriately, but also is optimized both in terms of scope of coverage and pricing? Is there anything else you want to share today, or should we stop here and then pick it up again next month and sort of expand this insurance discussion to other topics?
I guess the one thing I think maybe is worth addressing and it's not specific to the blockchain space, but I think we hear all the time questions about why do we need insurance if it's not going to pay our claims? And I think that's a rumor that, in the financial and professional lines coverage space, which is what we are in, insurance pays. And so far in the blockchain space and the digital asset space, we've heard about a number of large hacks. None of those, as far as we know, have been insurable, not because insurance wouldn't pay, but because those companies didn't actually have insurance in place. There have been some D&O related litigation out there, and there are D&O insurers who are actually paying on behalf of companies in this space, in those matters. So that's just a nasty rumor that in this space, I think should be dispelled right away, because if you can't get past that and you think insurance will never pay, then why even bother having this discussion? But other than that, I think that's it, and definitely looking forward to next month's conversation.
That's a great point. And since we have a couple of minutes before the panel starts, I'll throw out another nasty rumor, to use your words. I think sometimes in this space, there's a perception that if you're utilizing, some third-party service provider or some combination of them, that you can just transfer the risk and you don't have any risk and you don't need any insurance of your own because whoever your custodian is or any other provider in the space has insurance. Maybe you can talk a little bit about that, because I think to your earlier point about banks having crime insurance even though they don't expect to need it, I think they also have insurance and insure things that their third-party service providers insure too. So what does that look like, and what do you think, how do you think that'll change and evolve over time as purchasing insurance just becomes more normal in this space?
Yeah, that's a loaded question. We have a lot of clients who hold assets with, for example, custodians, and some of those custodians do buy insurance, and some of those custodians are our clients. And what we tell our clients that are holding assets with others or using third-party vendors is that those third parties should absolutely have insurance in place, but you need to also make sure you're protected for your personal exposure. So if I have assets held with a custodian, if there's some type of breach and there's a loss of assets, even if that custodian's insured, chances are I'm not their only client, and that insurance is probably split between all clients. And so it's not necessarily that I would get the full value of my assets back or the loss of my assets. And so, having your own type of personal coverage in place is definitely helpful. If you're a company using a third-party vendor, you need to make sure that you're insuring yourself for your exposures as well. You cannot rely on a third party to cover those. You have your own customers and your own obligations, and you need to make sure you're protected. The second part of your question, how do I see that developing? Insurance capacity in this space is still limited, and we try to level set with all of our clients. We have been able to get the appropriate and necessary coverages for our clients, but it's a challenge, especially compared to the more traditional types of businesses. Over time, and a lot of it, to Jackie's point, is hopefully changing because of the amount of time we're dedicating to educating the insurance markets. We're bringing in outside vendors, whether it's lawyers or other vendors in this space, to educate the insurance markets. Capacity will hopefully continue to grow, and it has grown over the last couple of years, and it's continuing to grow upwards as well. And so over time, it will be easier to get the necessary coverages you need.
Awesome. Thank you so much for that. All right. Well, I think we'll stop there and pick it up again next month. And certainly there's lots of information on the landing page where this video is also hosted that links to some content we've put together that people can check out, or they can, feel free to reach out to either of us with questions, and we'll be back. Thank you.
Great. Thank you.